Alright everyone, here we are with ticker symbol WKHS, Workhorse Group Inc. And before we jump into this chart, I want to say welcome to all my first time viewers and investors. Welcome to my channel. For all my subscribers and investors that have been following me for quite some time now, welcome back, and let's jump into this chart. So Workhorse is continuing its bearish run, and we can see that here as it had a very bullish run, reached highs. I've been mentioning it in all my videos for all the first time viewers or anybody that's been overlooking it or haven't realized it. $31 and some change is one of the highest points that the bulls want to break through, and one of the most important resistance levels for this one in the long term and the weeks to come, or even months. Now also the bears are going to want to try to cross the lowest point in this bearish run, and it was way down here at $20 and some change, and that is one of the support levels for the next coming weeks and months to keep in mind, because once that gets crossed, this could be on its way down to newer lows. So from that point, right, we hit 31, it dipped, hit $20 and some change. The bulls were able to have a recovery, break through the 50-day moving average, and work their way up to these highs here of $28 and around 63 cents. Now, that is an important resistance level for the next coming days, right? And now we are on Friday, ending the week with the stock market. Most of them are falling, right? The stock market falling and crashing slowly but surely here. And yesterday there was a catalyst, and today it continued to break through support levels. So Workhorse is actually falling now, and it is confirming to stay and be in bearish territory. We're going to see what's important now for next week. Workhorse needs to break through resistance levels so that this can start to work its way up to newer highs and get back into bullish territory. So we're going to zoom in here and see what is important for the coming week. Now, obviously, support was broken through. The bulls tried to reappear and get back up so they can start to work their way up to newer highs, and quickly the bears reappeared, leveling this one off at 23.71. So let's move this to its new locations, and we're going to talk about this very narrow, and then I'm going to talk about it a little bit broader so that we can have other points of reference to keep in mind before narrowing it down to the T. So right now, this is the highest point in the recovery, which is our resistance level, and this is the lowest point in this dip. Now, there are other points to keep in mind. So if resistance level does get broken through and the bulls accomplish that, the first one where the green line is, the next resistance level that you want to keep an eye on is 25.42. That needs to be turned into a support so the bulls can confirm staying in bullish territory and work their way up to newer highs. Now, on the other hand, we have our support level, and the lowest point reached in the day was down here at $22.65. The bulls are going to want to stay away from that as much as possible. The bears' goal is to actually cross this. By doing that, they've crossed two support levels. They're confirming gaining more control and leverage over the stock chart and bringing this one down further away from the 50-day moving average. But let's go ahead and look at our support and resistance levels. Our resistance level, the first one that the bulls want to cross, is 24.85. If the bulls are able to cross that, this could be on its way back to newer highs, and go ahead and use that as a support to break through new resistance levels. If the bulls accomplish that, they've accomplished two things. They broke through the first resistance level that they needed to break through to start to work their way up to newer highs by turning it into a support and break through in an upward direction from there. And the bulls have accomplished getting into bullish territory. How? Well, they got over the 50-day moving average by accomplishing that, because 24.85 is the resistance level, and our 50-day moving average is 24.78. Very important point to keep in mind, that 24.78 lets us know on what side of the chart we're on. Once we cross it and we're over it, bulls are in full health and in control again, and they can start to work their way up further away from it in an upward direction And as long as we're below it, the bears are in control. And we've been below it way back since the 30th of September, and it has been falling to newer lows and breaking new support levels. Now, the bears are going to want to break through support, and support is 23.56. We closed off at 23.71, so we're not that far away from this support. If that support gets broken through, I want to emphasize how important it is to pay close attention to how quickly this is moving to newer lows and how the stock is reacting around these areas. Are the bulls trying to reappear and bring this one back up, or are the bears tearing this one down fairly quickly and working their way down to the next support level down here at 22.65 in that area and start to work its way to newer support levels and newer lows? So very important to keep that in mind, that 23.56 is a point of reference to keep very close eye on how this stock is reacting and see who is dominating the chart once that gets crossed, because this could start to test newer lows and new support levels and move further away from the 50-day moving average of 24.78 in a downward direction. That's what the bears want to do. They've been dominating this for several days, and the beginning of next week is going to be very important to pay close attention to that. As always, if you found this video helpful and informative, please do so and subscribe, but don't forget to click on the bell. By clicking on the bell, you can turn on all notifications to not miss a single video that I post. Share this with your friends and community, and don't forget to hit the like button and let me know you watched this video. At the end of this video, there's going to be a pop-up video, and in that video, I talk about the S&P 500 companies, and in that video, I go into further detail why I'm talking about the S&P 500 companies. But let me summarize it just a bit for you before you click on it. I go into further detail in the video, but let me just explain. So the S&P 500 index is actually rising, right? The S&P 500 companies are the 500 best companies of America, and they're actually rising on scheduled dates. Now, there are Federal Reserve pumps that are scheduled on these dates, making the S&P 500 index rise by several points. Now, if the S&P 500 index is rising several points, the 500 companies, which is 500 different ticker symbols, are rising with it, most of them. And they're rising anywhere from 30 cents to $3 per share, something that is not big numbers, right? I know it's not tremendous profits, but 30 cents to $3 are profits. Like I always say, profits are profits, and per share, that does add up. I'm not guaranteeing that you'll make that money or that you're going to make money. You have to do your due diligence and research, but it's a great way to go ahead and maximize profits and minimize losses by buying at the right times and selling at the high times, right when it actually rises up with these pumps, and buying at the lows from the previous week or previous days, and then taking advantage of the fact that these stocks are rising 30 cents to $3 per share. Check out the video. I'm not there to tell you to sell, buy, or hold. I'm just there to inform everyone and enlighten everyone on the great news that there's an opportunity to make profits. As always, thank you guys so much for watching, and let's make some money.